If you're not investing, then you're losing money every single day. Inflation is eating away at the money that you're keeping in your savings that's earning interest at less than 1%, while the stock market, on average, each year has gained 10%. So today, I'm going to break down how you can get started investing in 2025. Even if you're at $0, I'm going to show you where you can invest, what to buy, and how to avoid common mistakes so you can get to this money. Now let's get it. Now before I show you how to invest, you need to understand why it's non-negotiable in 2025. Now, first, inflation is killing your money. $1 in the year 2000 is worth 62 cents today. So if you've been saving it only, you've been losing tons of money. Now, number two, the stock market has been making people rich for decades. On average, the stock market has yearly returns of 10%. 10% versus in the savings, almost what, 0.4, 0.5%? Do the math. There's no way that you should not be investing your money. Now, I know the stock market may sound like a scary thing, especially during times like these where you're hearing about inflation, debt rising, job security, tariffs, etc. But I must tell you that the stock market has been down 25 times over the past 100 years, and it always recovers. You should not look at this as a scary thing. We want to check our emotions. You always want to make sure you're investing when stocks are on sale. So when the stock market is down, please remember that's a sale on quality companies. Now, third, did you even know that $10 a day could turn into 500,000? Yeah, that's right. 500,000. You have to understand, the stock market is not a get-rich-quick scheme. You're going to be investing this money over the long term, but just $10 a day for 40 years turns into $500,000. That's $50 a week, guys. Y'all spend more than that on freaking coffee. All right, now that we know why you need to invest, let's actually talk about how investing works. Now, there's three main ways to invest your money. The first way is stocks. Stocks are a small piece of ownership in a company. Think of Apple, Google, Microsoft, etc., right? These type of companies here, they want to grow their companies. So in exchange, they offer a share of their company to you who will be purchasing it. In exchange, you give them money to invest and try to grow, develop new products, etc. Now, the second way to invest is ETFs and index funds. Now, these are a group of stocks bundled together, such as the S&P 500, such as VOO, VTI, VUG, QQQ, you name it. Now, these bundles can be broad, or sometimes they can be based specifically on different sectors, such as tech, healthcare, utilities, you name it. When you think of this method, just think of it as having a bunch of eggs in one basket. There's always going to be some gems in there for sure. Now, the third way to invest is real estate, crypto, or gold. Now, we're not going to cover these assets today. We're going to just stick to stocks and ETFs because this is for beginners. Now, for beginners, I'm always going to recommend investing in ETFs. Think of this like owning a bunch of companies all at once. This makes this type of investment a very low risk investment, and you hardly have to do any research. Now, for beginners, I personally think that the best ETF is something that mimics the S&P 500. This has consistently grown for decades. So when you think of this, you think of VOO or SPY. Now, additional ETFs that you might want to look at is VTI. This mimics the total stock market index. So therefore, you're going to have 4,000 plus US companies in here. That's a lot of companies, guys. And it's the broadest ETF. Secondly, I'd invest in QQQ as that gives you exposure to tech-based companies. It mimics the Nasdaq 100, which is pretty tech-heavy. Now let's go ahead and get practical. This is how to start investing today. Now the first thing you have to do is pick which platform that you're going to invest with. Now, I'll be honest, there's tons of investing platforms, but these platforms are going to be best for beginners. You have Vanguard, you have Schwab, and you have Fidelity. These are great for long-term investing. Now you also have Robinhood and you have Webull, but these are best for beginners. They have low features, but they keep it pretty simple and easy for you to invest. Now the second step you're going to do is choose your investment. Remember, for beginners, you want to start with an ETF, something that mimics the S&P 500, such as VOO or SPY. With this right here, all you have to do is just set and forget about it. Invest in this, buy and hold for years. Now step number 3, you want to start small, but you can be consistent. Guys, even if it's $50 or $100 a month, Starting and being consistent is everything. Remember, we're not in this for a short time, we're in this for a long time, okay? Money does not come overnight. You're gonna invest and you're gonna keep continuing to build your wealth, and before you know it, you'll see this small flower grow into a enormous tree. Now, before you go, I should probably give you some tips for beginners' mistakes that can help potentially save you on thousands of dollars lost. All right, so mistake number one, and that's trying to get rich quick. A lot of people will chase whatever news is going on, whether it's meme coins, crypto, anything that has some hype around it, people rush to it. But you have to understand the actual truth. True wealth is built over time. If you're able to get into something early, then it always benefits you on the long run. Usually, by the time you've actually heard about it, it's too late. Mistake number two is investing without a plan. You have to realize what is your why, your purpose for what you are specifically investing this money for. Is this for long-term wealth? Is this for a house? Is this for a vacation? Whatever the purpose is, you have to understand why you're investing, so that way that helps you understand what to invest your money in. Then you have mistake number three, selling too soon. Remember, the stock market is an emotional place, so people panic when the stock market goes down. You see all the news, social media, everything is talking negatively and impacting your emotional intelligence when it comes to this. But remember, you have to keep focused. Tunnel vision right here. You've done research, you've invested, and you have to stick to your plan, because people who hold and continue to invest in the quality companies that they've researched will become wealthy people in the long run. Because remember, you're in this with time. All right, guys, now you have a complete roadmap for 2025, but watching this video is just the first step. Now it's time to take action. So now it's your challenge time. Step one, go ahead and open that brokerage account. Step two, go ahead and invest in that ETF. Step three, comment down below. Let me know you started. Let's go ahead and build some wealth together. Now, I must let you know, I am not a financial advisor. Everything in these videos are for educational and entertainment purposes only. If you are going to invest, you have the potential to lose money. So you should always do your own research and consult a licensed professional before you make any type of decisions with your money. Now, if this video helped, hit the like button, subscribe, and turn on notifications, because you don't want to miss out on weekly videos like these that have tons of investment tips and more. Now, until next time, I'm Marcus, your host here on Zero to Wealth. Peace.